And we are live. Welcome everybody for another webinar. Not really a webinar, right? It's like analysis of the live session.
Hello. All right. Welcome back to WPAT London session.
London session.
Yes, where we're gonna, news just came in. Dog caught running off with a human head in Mexico.
That doesn't seem to be a very nice news to start the.
This is
the
ridiculous. Oh my goodness. Wow.
Okay, so in
It
other news,
has nothing to do with Forex. I'm sorry.
Yeah.
All right.
I think we can do we start with the most recent, or we go like how the day started, because.
Well, we'll do with whatever we used to do. So anyways, first thing first, what are we talking about here? We're talking about Forex. So Forex is traded with margin, right? And it is a leverage product. It may not be suitable for all investors. And this product does contain high risk, okay? And so, look, everything that's being said over here and or done is purely for entertainment and educational purposes only. So if you need independent advice, do seek professional ones, okay? All right. That being said, let's start off.
Yes.
Okay, so for the London session, basically a lot of excitement's happening. Okay,
Yeah.
it's a Friday. Okay, where people are gonna now close off the month basically.
Yes.
Okay, yeah. So, anyways, all in all, I think some of the things that have a major impact. I think everyone is still wavering about whether the market is going to be in recession or not. There's an article, and a lot of analysts are stating that we will be in a recession. There are some people that say we are already in one. We are not. Okay, I personally don't believe so.
Well, the recession means that the GDP of the country will decrease, not grow, right? So then I'm with you to the point that I also don't feel we are in a recession. But then if you look for countries like US and China, how the inflation is impacting them so highly, and then this is like a cascade for everywhere else in the world, because they're the two, like they're doing business with everybody, with every single country.
Funniest thing is their GDP numbers are not going. They're not worse than what they expect, and if anything, it's growing.
Yeah,
That's
so
the weird
that's
part.
what I'm saying. Like, I don't feel it's a recession, but then with the inflation, and then US, we had recently the supply chain problems. China with the zero COVID policies. So then it does feel that economically we were. I don't know. It feels that the worst part passed. I risk to say, and then now we're just seeing like, is it gonna get better? Is it gonna continue the same way? Like, it feels like we're just like on the, like, how to say, like on the ocean. Like, you don't know if the wave is coming or you're just floating there. If you can go to the shore.
I think everyone is literally just waiting for the year to end and see how they will take next year. Now, anyways, all in all, some of the biggest news that just happened, okay? Twitter and Elon Musk. I know everyone's watching out for tech companies. Well, obviously, Twitter is also, on the spotlight lately, right? Elon Musk, it's official, right? He actually now started doing some movements within Twitter. And actually, very high-profile people are getting canned.
Yeah, the CEO, the CFO, and I think like two more of the C-level management is also.
I think we're looking at total control. Well, anyways, look, there's one thing, okay? So, look, most likely Twitter, what we're going to be looking at is a lot of people are huge, Musk fans, okay? And we have to say most of his, products or brands, they do very well in the market, okay? And he has a lot of a strong presence in terms of the cryptocurrencies realm as well.
He has a lot of strong presence on those said platforms as well that he's like sought after, right?
Yes, but then you see, one of the things is this: Twitter. It was actually a very open space for everyone to be talking about anything they wanted, right? It's basically like a free wall for people to just type things, okay? But now the changes in Twitter is going to be where people can share most of the things in a controlled environment. See, this is the part I don't get, right?
The fake news is always a pretext.
We're going to have a controlled environment for open sharing? I do not understand how open and control can actually work together hand in hand.
I'm with you. I think, but then this is such a hard topic, because
I know how it will be controlled.
Like if it's his opinion, it's fine. If it's not, it's fake news.
Exactly. And then therefore, crypto or any currencies or stocks will be highly influenced.
Yeah, but then
I did not just say that.
Yeah. But then the opposite is also like if you just like give 100% free speech, then you're gonna have like hate speech and like fake news and like illegal stuff being said and so on. So like, how do you balance?
Well, I don't know, right? But anyways, being controlled, I'm not too sure about that. But hey, the good thing is that Twitter stocks have rised a little bit, right, due to this transaction. So that's great news. Okay, and most of the people are looking at tech companies, how their stocks are working to be able to see the future direction of the economy. Well, I have to say, yeah, there's no tech company that's actually looking very promising. Well, actually, on tech news, Apple just announced their earnings, right? Yeah. Yesterday. Okay, and guess what? Even in the standards of the analysts and the economy thinks they did a bad job.
Yeah, and that's why the stocks drop
it's a
so
joke.
Much this morning. The same with Meta.
No, right? But did you know? Okay, Meta is a totally different thing. Like they are gonna just go no good right now for a very long time
because of how much they invested on the metaverse, and then this is not paying out for them.
Yeah, because I think it's like too many people do not understand what exactly is a metaverse and how it's gonna work. Like no one can explain it.
I feel we had the same conversation about Second Life.
Uh-huh.
If you're old enough to remember the Second Life, like the real world sucks. Let's open our companies on Second Life. You don't need to go to the office. You just like you just go online.
That didn't work though.
It didn't. But then with the COVID, right, a lot of people went remote. So then it's like, oh, maybe that's what Meta thought. Like, oh, now is the time. Like, let's forget real life. Let's just start meeting only on the metaverse. And then people are like, no, it's okay. I'll just stick with the real life.
On the other side, though, I do see that there is a very strong and prominent future for so-called metaverse. Okay.
Yes.
But before we jump into that, actually, I think we should actually bring back to Apple. Okay. What I want to say is this: Apple actually did an amazing job. I do not understand how people are looking at it as a bad, earnings for them. Okay. They actually exceeded. They created a new record high for their quarter in earnings.
I feel we are at the what's the movie name? Is the
I don't know. You better not say it because we may actually get
it's
copyrighted over here.
Oh, okay, I was gonna say the
we'll be muted forever.
Yeah, like it's good, but it could be better.
You guys get what he means.
Yeah, I remember the movie name, but I'm not gonna say it.
So, anyways, basically, Apple did an amazing job. They actually created a new a record for their earnings, for the quarter. So that's
because they just released the iPhone 14 and everything,
which is great. Now, guess what? Analysts, I do not understand why, but I have to say, I guess Apple is not just a brand anymore. It seems to be like the S&P 500 type of thing. It's a landmark for technology or something. You see, look, they just missed by the expectation or the so-called forecast by a little bit. We're talking about like 43 billion. Okay, that was the forecast. They hit 42.6 billion. And this is called bad?
That's an explanation.
Okay, this is ridiculous. So obviously now we can definitely say that, looking at Apple stocks could actually be like the new thing for tech companies. I mean, tech, they're always looking at, Meta,
Samsung.
Google, Alphabet, they're always looking at that. But I guess right now we could have just put all of that aside. Let's take a look at Apple first, and then you can look at Alphabet, Google, Amazon. Okay, that's not financial advice, by the way. All right, so on other news. Oh, well, I just got notice that we're on the New York session.
On the title.
We're going into the future. We'll edit that. We'll edit it properly. It's the London session, okay? London session. When you guys see the replay of this, it will be corrected.
Yeah. Anyway, moving on.
All right. So.
Can I change it like live? I don't think it.
I don't know. I'm not sure.
It's okay. Keep talking while I try to figure this out.
Sure thing. Sure thing. All right. And then on other news, okay, I think that's something that you guys should all take a look at is basically oil, right? Exxon, okay? Exxon is actually going to be releasing their earnings data, okay, basically today, or should I say tomorrow for you guys? Yeah. Okay, it will be today, actually, later on today. Okay, it's going to happen at 8 a.m. Okay, Eastern Standard Time. So we're talking about in the morning of Friday morning for the New York session. Okay, so Exxon Mobil is actually going to be announcing their earnings. Okay, so that's actually something to keep an eye on, because I know that oil has actually been rising for some time right now, right? Also, in mid-October, right, President Biden from the United States actually was very confident in terms of oil. So then they actually increased a lot more of the usage and exportations, okay, refineries. Okay, so therefore then hopefully that Saudi Arabia will be, imposing more barrels into the market. Okay, hopefully that they will remove a bit of the cap, because it seems like a lot of people are more confident in purchasing oil right now. So that's great news.
Yeah, but then just as a warning, with oil, since it's controlled by the production side, if the price starts to drop too much, then they'll stop producing it, right? So it's a very artificial way of controlling it. So just be careful if whenever the prices change too extremely. Right, because then they'll like for example, if the price goes up a lot, then of course they start they'll accelerate the production so they can capitalize on the higher price. So then they'll drive the price down very fast because of the increased supply.
Yes.
Yeah. So then just as a careful, we'll hit a limit.
Yes. All right. Well, obviously, energy, right? Natural gas is not doing too well in the markets right now, right? It's too much instability. So maybe you guys can all take a look at green energy right now. This is something that we could actually be following much closer. Okay. We did say that apparently now in England, right, the regulators are controlling basically greenwashing, right? We can't always constantly say, oh, this is green energy, green this, green that company. Which is weird, we're going green, and then now you can't greenwash things, right? Because they're claiming it's greenwashing, right? So it's no good. Oh well. Anyways, let's jump into the market. Okay, let's jump into the market today, right? For the GBP USD, look at that. The bell's already ringing, telling us to get you ready for the market. The very unstable market.
Yeah.
All right, so GBP USD, what are we looking at? On D1, basically, it has started lower than the closure of yesterday. Okay, the pound has actually decreased in strength. It is actually going into more bearish momentum right now. Okay, but let's take a look at the long term. Okay, so 2 days of strength on the GBP, and then now it's actually weakening. But let's quickly take a look at what may be happening. Okay. We still see that there is a good support, okay, a bullish support, so that could be a good sign, right? That maybe it's not going to go all haywire and just go, uncontrollably valueless, okay? So let's take a look at H4, okay? H4, basically, right now, most of the indicators on the moving average are indicating that it is actually putting, touching on a resistance point. Okay, hopefully this will actually just range the market a little bit more, and then for most of the people, they want more confidence in the pound, then it will continue to go up. Okay, but if, let's say, politically it is not that stable, okay, or economically they are not able to cover the huge gap in their debt, then I think people will lose more confidence, and then it will drive the prices down.
Yeah, and talking about a little bit on the candle side, you see that so far the drop we had on the last 2 days is less than the increase we had on the beginning of the week. So then this could just be like a small retraction, and not that it's in the market is suddenly bearish.
So what Achilo's trying to say is that potentially this is just a pullback session. Yeah. All right. So let's quickly take a look. Okay, on H1, okay, Moving average has not crossed yet. Okay, so if you do see that the short moving average in our midterm moving average, 60 and 20 day, right? If it does cross, then most likely a new trend may occur. Okay, but overall, we're still looking at the further trend of a potential bull market for the GBP. Okay, all right. So let's quickly take a look at what type of setup for certain people would want to do for this trade. Right now, based on the D1. Okay, maybe people are just waiting for the retracement, okay, and then the pullback, and then buy.
Place a buy on a better price, yeah.
Yeah, okay, and then H4, what we're looking at, basically it did break above the resistance point, okay, that was set in beginning of the month, which was actually touched a few days ago, okay, and I believe now this will become our new support point, okay, so a lot of people may wait for this retracement to follow through first and then place a buy as well on the H4. Okay, now H1, how does it look like right now? H1's candles are all very bearish right now, okay, but you see a lot of wicks happening, okay, so it seems like there is still a lot of buyers, okay, for now.
And wicks always gonna show indecision.
Yeah, RSI is trading almost at the oversold zone, so once it's at the oversold zone, there could be a chance that you guys can actually see a bullish direction for this.
Yeah, a lot of the players will give up on their sales and start believing that the market will not continue to go down.
Yeah. All right, so on D1, this is for Euro USD. Okay, so D1, we're looking at, whoa, look at this. We considered this actually a tweezer top. Okay, a tweezer top is not a very strong one. Okay, it will actually mimic the previous pattern. Okay, what we expect, right, for tweezer tops. Okay, it will actually pretty much mimic this pattern that has occurred before. So we're looking at a also potential retracement as well. Okay, but overall, right, basically, I have to say on D1, confidence of buyers are not fully there yet. Okay, because it seems like overall direction is actually still bearish. Most people feel.
You say that, but then we already had like one candle that opened above the how do you call that, above your blue moving average.
You know who I blame for this? Kanye West and Adidas.
Oh, I see.
Yeah.
I was thinking about like the prime minister, maybe Biden.
No. Political leaders are never to blame for such a thing. I know you guys all disagree with me, but let me be honest with you, right? Even up till now, people are still talking about the case and the deal that Adidas has dropped Kanye.
Yeah, it's a lot of money being lost.
So then for this whole Christmas season, for this last quarter of the year, oh my gosh, that's going to affect the earnings.
It will.
It's no good. Yeah, so I blame them for this issue. Poor Adidas. No endorsements at all, okay? They did not sponsor this video. Okay, all right, so H4. Let's quickly take a look at H4, okay? H4, we did see a evening star that has occurred. It did respect to come back down, but you do see that basically there is a crossover for our midterm moving average, okay? MA60 to MA200, right? There is a cross. Okay, so overall strength could be bullish for the Euro USD. Okay, so there's not a lot of buyers right now, but I have to say, I think what this indicates is that a lot of buyers are just exiting the trades. That's all.
Yeah, I was gonna say that like since it's Friday, and then I do believe I don't know if it's the next week or the next week. We still have like the FOMC, the non-farm. We're gonna have the like next week, I believe we're gonna have the U.S. Interest rates with the what just said in the beginning of the stream, inflations, right? So then I do feel that tonight a lot of the people on the market they're just gonna like close their orders.
Yes.
Right, they're not gonna risk it to leave it open to the beginning of November when like everything is impacted.
And you know why?
Because they're afraid.
Because they're all gonna go trick or treating. Yes, it's trick or treat, and they're afraid that the market will play a trick on them.
Yeah, you have to withdraw your money to buy candy.
All right, so on H1, do we see a potential sign of a reversal? To be really honest, it is all trading at the oversold zone, right, for the RSI on Euro USD. So there may be more buyers, okay, but closing off today's London session, I think they will actually create a little bit more of a downwards trend, a little bit more. They're going to push the RSI to the oversold zone. Once it's over to the oversold zone, then I believe maybe in the end of the London session, that's when you will probably see a little bit of a spike on the euro.
Just as a tip, right? Because I really like trading with the RSI itself. Normally, it's not a good idea to place your orders when the RSI entered the overbought or oversold zone. Wait for it to come back, so then you have a better, clear vision of the whole market, right? So then wait for it until it crosses back above this RSI 30 line. Then that's when you can make your decision if you're gonna enter or not.
Yeah. All right. Well, our last pair, okay, for the London session, let's take a look at USD CHF. Okay, also starting from a D1 perspective of things. Okay, so D1, what we're looking at, there is actually a harami, okay, a bullish harami. If anything, we are looking at it continuing on this bullish trend.
And then the candle of today so far is confirming the harami, right?
Yes. And obviously, look, it is 2 days of growth for the CHF, right? Sorry, for the USD CHF. And let's take a look at the H4. Okay, you see a bullish engulfing that occurred. Okay, and it is respecting it. Okay, so most likely people will be expecting a very bullish move. Okay, on the USD CHF. All right, so on H1, do we see anything out of the norm?
We had the cross of the moving average, and the prices are opening above the fast and the middle moving average.
Yeah, so it seems like, D1, H4, and H1 are indications of a bull market, right? Do be wary, right? H1, it's looking at getting close to the overbought zone. It's a good sign, right? Because once it reaches overbought, technically H4 is still trying to catch up, and it will be above 50, and then a lot of people will be ramming it up. Okay, a lot of confidence for buyers will be there. All right, well, for today, technically speaking, the most confident trade that we do see here would be the USD CHF. Once again, what we're doing here is purely for what?
Educational purposes.
There we are. Thank you for answering. Right, it's for educational purposes and also for entertainment purposes only. So for how we will be trading, okay, for our analysis, okay, and we'll see if it pans out to be correct, we're looking at a buy order, okay, and we will actually pull this up in an elongated session, so we are going to be aiming for it to reach basically the resistance point, okay, and if it's a stop loss, then technically we will try to also do the 1-to-1 ratio and to see how it goes, okay? But all in all, this is not financial advice. All of this is purely just for educational and entertainment purposes only. I guess we'll see them in the London session, the proper New York session today. Okay, bye-bye.